gonna be cold again tonight?
I'll stay right around this for a while.
I don't mind.
So it's freezing.
I don't mind. I feel like kind of a baller at home, man. I got that heater lamp thing that runs on propane, the industrial strength one.
See, I prefer no heat. Windows open. And this is...
No, I mean, I sit outside and it's beautiful. You got the little heat blowing down on you.
It's a low of 54 tonight. That's borderline freezing.
Watching the deer and stuff. You get deer by you?
Maybe that crossed that street, but
There's been deer everywhere, man. Deer everywhere. Welcome to the Closing Beat. How we doing today? Happy Tuesday. Hope you're having a good day out there. Where's my bears at? Where's Tandra? Loving this action in here, huh? Hey, we're financial advisors, and like unlike every other financial advisor, we actually manage our own portfolios. We don't just pick a mix of mutual funds or whatever. And so this show is kind of what I use on a daily basis, just to kind of update clients on what's going on in the markets. A lot of data points, as you're familiar with, and just to kind of show like we actually sort of walk the walk in that respect, where we don't like to we don't use mutual funds. So we don't like that whole idea. What do you need that for? So I just kind of like to review, let you know we're here, and this is one of the ways I like to do it. We make it public, so if you learn something, hey, that's awesome. You know where you learned it from, and I appreciate you guys watching. Well, we got the markets lower here today. I was excited like all day. Like this inner like itch was like, I got to do something. I got to do something. So I'm excited to finally see the markets pull back here a little bit. We've got a lot to cover in that respect. A lot of the news today was revolved around Fed President Jerome Powell talking about tapering, potentially talking about tapering sooner, and maybe announcing something in the December meeting. I think that's awesome, right? I think they should start tapering faster. They recognize the economy is running hot. They recognize that inflation is no longer transitory. I believe they're going to take that word out, was some of those comments there. And so what do? You got to tighten up money supply, right? That's a given. And I like that they recognize that. So I largely see this as a good thing, but I get why investors are like, oh man, you're taking our candy away, right? We've had all these years of this really sweet, great candy. Now our body's paying for it, right? We got to step up and do something a little different. What I also like about today's market decline was we stayed near the lows all day. This is one of those rare times. I'll just kind of zoom in here a little bit. We get to the market open right here. These are 5-minute candles that you're looking at. And all day we basically stayed right near the lows. There was no real attempt to try to recover from those lows there. And what does that mean in the grand scheme of things? Number one, it's a sign of people's reluctance to buy. Right? They're like, I'm not buying this dip. I think it's going to be more. But there's another little underlying thing here because we're approaching the end of the year. Tomorrow's December, right? So we now get to this point where think about yourself. If you have a brokerage account, some sort of investment, you're invested in a hedge fund, whatever you have, you're up here with this taxable gain. You're like, why would I sell when in January I could just sell, then delay it for a full year plus 4 months until I have to pay taxes on it, right? So you're saying, I'm not going to sell anything. But as the market starts to bleed down, all of a sudden you do that math model in your head and you go, if the market falls 10% and I was really only going to save like an effective tax rate of like 13, 15%, whatever it is, maybe I better sell this year and pay the tax now. So now you have that extra emotion playing into the market where people think it might be better to take some of those gains this year and maybe I'll hold some of them for next year, right? So think about that from a tax harvesting perspective. There's an extra emotion in the game there. Anyways, if we look at the S&P here for the day, still second place year to date, but looking a little bit rough there. Value stocks lost about 2 times more than growth stocks here today, and we're pulling back all the way to the 50-day moving average. Now, if you're a bear and you want the markets to pull back, I think you can't really celebrate yet. This is great. I mean, you love this, but you can't celebrate yet. And I should have some data here for you. There we go. I just ran this real quick. This is in our research tool that we have in the dojo there for research members and clients as well. What I did is I just said, hey, let's look back since the COVID low. It's about 20 months ago. And let's say the S&P loses about 2% or more in one day since the COVID low. Well, you can see all the data down here of every time that's happened. But off to the right, we could see, all right, that's happened 17 times, right? And 8 today doesn't count because it wasn't quite 2%. But the average forward gain, meaning the next day's gain, is about 1%. Median gain 1%. It's positive 88.25% of the time. So highly probable that tomorrow has some kind of gain. Here is every next day. So you can see it's not always going to be a 1% gain, but the average is. And since the COVID low, these dips have been bought up rather quickly, meaning one day later, we have a 1% gain, erasing half of the previous day's losses. So I think you have to look at something like that and say, well, you're hopeful that this is a real pullback that means something for those of you that have been waiting. But I think you can't quite say that. That's the reason why I bring that up. I'm looking at the data just going, I don't know, maybe this time's different, but every other time it's been sucked right back up again. In the S&P, there was a lot going on here today. I won't bore you with everything. I believe there was only one stock higher on the day. I'll come back to that in a second. You have a celebration for AT&T. I don't know if it's a celebration, but if you're looking for a dividend stock, AT&T officially takes the top spot as the highest paying dividend stock in the S&P at 8.7%-ish, right in there, as it made new lows today, falling 4%. So if you're looking for a high dividend paying stock, that would be your top pick in terms of the highest one in the S&P. Altria falls in second place there with just about 8.1, 8.2% total yield, and maybe a little less volatile than AT&T's been here lately. But looking through the S&P, I'll just give this little guy a sort. You're going to find some retailers in there. Turns out Cyber Monday, good job again. You didn't go out there buying a whole lot of stuff. Actually, that's not entirely true. Cyber Monday was pretty much a success, but you didn't focus all your attention on Amazon. You didn't focus all your attention on Kohl's.com or Target or whatever it is. It seems that buyers were more spread out, now including Etsy and other different places there. So it wasn't a huge success for anyone. It appears, besides like Amazon, it still did good. And so that's one of the names, actually, that lost the most on the day. And just real quick, I lied to you a second ago. I was looking at the Dow just a second ago. Apple, I don't know what happened. Apple was at highs today. I have really no good reason why. A little excitement from Cyber Monday, maybe, some Apple products being sold. Tesla was a little higher as well. And of course, Pfizer on the new, I'm calling it Omicron. I think that sounds cooler. That was higher as well, despite them saying, they said that their vaccine should be pretty good. But so that's what's going on in the S&P. If we look at the Dow real quick, the Dow pulling back to the 200-day moving average there. Since the beginning of November, it has fallen faster than the Russell. The Russell's in last place, but it is rapidly catching up to the Russell in terms of losing more there. It presents a lot of, and it's not a big list, but it presents a lot of extended declines to take a look at. We'll look at that here in just a second. But you've got Apple hitting new highs today. That was one of the only stocks positive for most of the day, just about all the day. Merck came back from behind here at the end of the day and was positive. Salesforce.com, nasty day for them. It was actually up higher initially in response to earnings, which is we saw yesterday was actually kind of typical, but got pulled back throughout the day because of the weakness in the Dow there. And some of the extended plays, look at Coke. All of a sudden, you have Coke more extended than it usually is in the ultra short term. Not something most people, traders, like to look at. American Express actually sold the 140 puts on this one. Thought that was pretty cool. Look at you. This is starting to get extended. So if you like those really extended, oversold stocks to the downside, you're starting to find there's a handful of them. Honeywell's another one. It's working on it anyways. Honeywell rolling over outside of a range here. Again, not an exciting stock, not something most people look at, but I don't know, right? Some opportunity there. You're putting together a watch list. You got a little shopping list maybe. And if you're a short-term trader, there's plenty to do out there right now. So you keep yourself busy. For Guess the Dow, let's see where are we doing a standings?
Yeah. We got the last weekly version of Guess the Dow.
This is the last weekly version.
And going forward, we're playing for the end of the year. So if you guess this week, you're guessing for the end of the year. But this week's standings, we're at the very bottom of the list here. We got Victor, Silk, Jeff, Vance, and Ron. Those are your top five. Kind of a big spread there between 1 and 5.
Whoa.
We don't see that too often.
Yeah, you could tell that's the bottom of the list because we're going all into the 33s now.
Yeah.
So 34 is about basically where we were today, 34, 483. Yeah.
We got a couple down there at 21, which I thought.
Okay. That's our real bears right there. I love it. Well, that's this week's guesses there. Now we're playing Super Guess the Dow, Super Duper Guess the Dow, going forward. So my daughter doesn't really know, but she knows if the regulators ask, right? God, I have to say she knows. But we're not really telling her, like, if you happen to buy something from her, the link is in the description. It's the Eternal Crystal Co. She makes jewelry and stuff. So if your wife or your kids want something like that, you don't have to buy anything to play. No purchase necessary. But what we're doing is we're saying she is sponsoring this competition. So first place, you guess the Dow at the end of the year where it closes. You can take your guess now. Is $500, $250 for second place, $100 for third place, and best of luck to you because you got your work cut out for you now with the Dow wiggling around as much as it is. And like I said, it's not like a promotion for her. I just thought it'd be funny. Like, what if we used her as a sponsor and somebody actually bought something? She had no idea who it was. So that is on the description. If you're interested or you just want to take a look and give her a hard time, just don't tell her about what's going on because she's not supposed to know. Anyways, back to the game or the game of the markets here. I want to point out crude oil, another area to look at. Just as I'm bouncing around a little bit through the indices and commodities and stuff, crude oil down 4% on the day. You like that, don't you? You like how extended oil's getting in the short term. Now remember, you got the OPEC Plus meeting coming up this week, so volatility in oil is going to continue. No ifs, ands, or buts about that. Tomorrow is our oil inventory numbers. Then we go into OPEC Plus meeting to see what they're going to do. I don't know, actually, if they'll budge this time and say we're going to produce a little bit more. Also, I want to point out Bitcoin pulling back. It's basically floundering around in this 57,000 area, but a little bit of weakness here today. And a friendly reminder, you really want to think twice about using Bitcoin in an IRA, traditional IRA. Eventually, they'll come to 401ks and stuff. Really think twice about that. Ask yourself about how you're going to be taxed on the gain. And then also, if you're one of those people that says, I think we're going to be spending it in the future, why would you use an IRA to buy Bitcoin or any other coin for that matter, if you think there's one that's going to shine really down the road? I did a class for clients on this one to show how it's the least efficient way really to invest from a tax perspective. So just take 2 levels of thought there and imagine yourself down the road with an IRA that has Bitcoin in it, and now you're starting to take money out. Why volunteer that extra tax there? I'm not sure I understand that one. Anyways, what do we got here? Hey, the 10-year now trades under 1.44-ish, first time since right around here, September we'll call it. And so S&P's yield is only 1.25%, right? So still a better play, but real yields, meaning after inflation, are still very much negative. So kind of a tough one there. Obviously, real yield is negative there. But here's what's happening. We now have stocks that are responding to this volatility in yields, both for the positive and for the negative. So I thought I'd do is try a different way of explaining this to you here today. Which stocks currently are responding the most to rising prices and lowering prices? Now remember, when we talk about bonds, prices rising means yields are going down. So lower yields, I'll try to say it that way for you, so we'll keep it consistent. Lower yields, which stocks are responding positively to that, and which stocks are responding negatively to, which would be higher yields, right? So we're taking both sides of this. So let's start with it. We'll take a look. All right. So I put a little list together, and I was trying to show a fun way of looking at this here. Stocks that are most negatively correlated to falling bond prices, which is higher yields. So if you think yields are going up, which stocks are responding most negatively to that at the moment? I use the IEF for my benchmark here so we could check the correlation on this. And on the chart here, you're actually looking at which ones are the most correlated all the way out to the least correlated. And there's not really a large spread between them. So here's what we got. First, you got MTB Bank, right? And we're working our way around. The dots sort of indicate that. I hope this isn't too messy. MTB Bank, American Airlines, Hewlett-Packard, Host Hotels, all the way around. These are the top 10. So if you're looking and you own some of these stocks and you go, wait a minute, this is responding in a negative way to rising rates, something to look at there. It's just a quick little list to put together instead of listing out a whole list of stocks. The MTB Bank would be the most negatively correlated to rising rates, right? So that one's currently seeing the most fluctuation on a day like today where rates actually fell. You're seeing the difference there. Stocks that are responding most positively to rising rates or falling bond prices are listed here. You got Clorox, which seems like a pretty obvious choice. That is the most correlated, and you've got a much larger spread between the most positively correlated and least, of course. You got Vertex Pharmaceutical, INSEE, Citrix, Regeneron Pharmaceuticals, Hormel, Kimberly-Clark, all the way up to Campbell's Soup, which, to be fair, Campbell's Soup and market access as well really has been kind of beaten to death, right? So I don't know that this is anything that could be extended out over time and saying historically that's the case, but the rest of these are definitely the case. So if you happen to own some of these, whether you're thinking dividends or you're playing biotech or whatever, know that you're staring at stocks that may see extra volatility purely because of rates rising, all right? So I hope that helps you guys there. Just thought it'd be a fun way to take a look at something a little bit different. If we go to new highs and lows for the day, you had 6 new highs. Of those 6 new highs, there were 3 semiconductors, 2 REITs, and 1 utility. That was the spread there. And you also had 42 new lows. All but one of them closed down on the day. So X-Ray was the only one, just barely, 5 cents in the positive, was the only stock that closed the day positive. The rest of them all closed negative, which is understandable. The market was down. But this one's also extended, right? See this waterfall sort of parabolic drop that we've got going on here? Definitely one for the watch list. I know we already talked about that one. Bristol Myers. This one I kind of more of a heavier position for me as far as a short-term play. Just to have some fun here. Throughout the day, was inching into the $50 puts, and I actually got probably twice the size of position I normally would there. Looking for a bounce or a sideways move on Bristol Myers here. And it's the same thing, right? It's just extended. Look through stocks that are rolling over and maybe more extended than they normally are. That's where you're going to find your short-term fun. Medtronic is another one there. Still probably working on some downside, but notice that it's more extended than it likes to be. Historically, this stock does not do this, right? Over and over and over again, when it gets this extended, it likes to recover a little. I put some CCL in there. That's Carnival Cruise. Interesting story. A friend of mine went on a cruise. I don't know if you know this. So if you're not, you can go on a cruise if you're not vaccinated, but you get a wristband. If you're vaccinated, you get a wristband. If you're not vaccinated, you do not, and that limits your access areas on the ship. Do you know that?
Oh, I didn't. No,
no, that sounds bad. No, so a friend of mine just told me that because my daughter's going on a cruise. So yeah. That's crazy, right? And they don't tell you that ahead of time. It just says, hey, you got to prove you have vaccine or that you're COVID negative and all that. Crazy, right? So a little heads up there. But nonetheless, I wanted to show Carnival Cruise on there because that's starting to get extended. You understand why. I mean, you get the volatility there, no big deal. And lastly, we've got Disney. So Disney is, this is the one I've still got from the other day. Sold puts on this one here. And really just trying to play for fun, just play some extended stuff here. It doesn't mean it can't get more extended, but sold the 140 puts yesterday, and we'll see what happens there. It did make a new low, down 2% on the day, and it's going to be affected by vaccine news there. So definitely should see some volatility. What do we got here? Some news for the day, and then I'll take your questions. If you have any questions, happy to help you there. Microsoft pulled back about 2% on the day. Turns out the CEO sold about half of his shares. That's a lot for a CEO to say, I'm just going to sell out half of my shares. I don't blame him, right? Obviously, things are really good. Obviously, the stock price has done really well. Puts about $285 million in his pocket, selling off half of his total share position there. JK Solar got better than expected earnings. Revenues were a little bit weaker, and they did lower guidance going forward. But they lost 21 cents versus the 23 expected. And I don't know. It was interesting. It was in the news, but it's not really one. How do you wrap your head around what's going on here with this? A lot of back and forth. So I'd be careful to get excited about that one. I believe tomorrow we will now call this stock Meta Companies or something like that. Facebook's name change takes effect tomorrow. Meta Platforms is what they're going to call themselves. Anyways, the stock was down 4% on the day there. They bought Giphy. I didn't even know they bought Giphy, but the UK is going to investigate that. And also, naturally, the tech stocks had a weak day today. Point out United Healthcare. They said their full year earnings going to be in line with as expected there. But next year they lowered their earnings expectations. So stock lost about 1.7% along with everything else today, sort of masked by the big decline in the market. And then you got Intuit down 6% on the day as well. Intuit, second, they're pricing more shares. They're selling shares up here. This is very common and happening a lot. They are selling out 1.548 million shares of common stock. That was priced today. It's a secondary offering, so that dilutes you if you own the stock there, and going to be the reason for your pullback on the day. Going forward, tomorrow we've got earnings from Five Below, Ralph Lauren or PVH, Snow. Oh, cool. We're going to have, that's pretty much it, actually. Ralph Lauren is on a streak of earnings reactions. The last 4 times actually been positive there. And Splunk actually reports tomorrow. 6 of the last earnings reports have actually seen the stock price react downward. Downward there. You got the testimony from Jerome Powell and Janet Yellen continuing tomorrow. Beige book from the Fed. And vehicle sales are coming out. So that'll be a little bit of fun throughout the day. And that's pretty much it. Yeah, man. Intuit saying we're going to sell some shares now. I tell you, if we were a public company, I would do the same thing. I probably would have already done it, to be honest. I'm sure that would have already taken place. Yep. Oh, yeah. Ledges says, do you think selling some of NVIDIA in a traditional IRA is good, or is this run likely I would peel out? Yeah. I mean, come on. I get it. It's probably a longer-term investment, and I agree with you there. But look at it. This incredible move in the short term. Any strong day, I think you use to sell something into it for high probability that you could buy it back a little bit cheaper. Yeah. Yep. Mm-hmm. We're not going all EV. Most people don't want to drive EV. The charging capacity. I would agree. I drive a 1941 Ford truck. I'm pretty happy with that. I don't need my charging station, but I do need a gas station every 15 miles or so. It's getting better, but I'm working on it. You think the Russell or Boeing are buyable on the dip today? I like the Russell better. If I had an opinion there, I like the Russell better. I just like the extended pullback on the Russell. Normally, you don't like breakouts that then go back into the range. But I like how quickly this recovered. So even if it only bounces to the top of the range and you're like, all right, I made a few bucks. All right, probably still worth the risk there. I'd really like if every stat was wrong and tomorrow we gap down big, right? The index gapping down big. I think that would make it buyable as well. But I'm thinking in this case it's more for a short-term kind of position there. So we'll see what happens. You want to buy more Carnival Cruise? That's a tough one. I think if you're looking to buy discounted stocks that have sold off more aggressively than the markets, would you want to tie it in with COVID-related stocks, or would you want to tie it in with something that could behave on its own, irrelevant of the news? You know what I mean? So I don't like that. And I worry about Carnival, the money they've raised and everything. As far as holding that position, if you had to, I wouldn't want to hold that one. I like some of the other. Bristol Myers, I mentioned that was extended. I know Disney's kind of a fringe COVID stock there, but yeah, I don't think I would go right for Carnival Cruise. Yeah. I know. But we'll see what happens. The volume, I noticed that. I don't know why. I have no good answer for that. The volume is set for every camera angle, and it shouldn't change, but I did notice that when I was watching the show one night there. Oh man, you got garages on fire and stuff. Need to see that. United Airlines is up after hours. I did not look at that one. Where are we standing here? What was that? Earnings or something? AWS working with them. Cool. So is Goldman Sachs, by the way. What signs of reversals on the Dow would be a good indicator to get leaps on the Dow? What signs of reversals? So a sign of reversal, like a technical pattern, I'm assuming you're saying there. So in your case, would you not want to be like the third or fourth day after some major flush out? You know what I mean? I don't think there's any hurry. I wouldn't be in any hurry there. And also, why the Dow? You know, one day YouTube should make it where I don't have to read. I could just say like, oh, Chris is up. Like, let's see what Chris has to say, and I just see you. Be a cool feature. Yeah. What signs? Alibaba. How low can it go? I don't know, man. I'm salivating over here. I want to add more to it. Look at this Alibaba. I would add more to this. I've been saying this for months. I don't know. I can't find a reason to say that this would be a buy. I'm willing to. We have like a 0.4% position or allocation in Alibaba, and I want to get back to the 2 to 3% area. But how can you justify it right here? You know, other than guessing. You could do that, Tandra. Yeah. Yep. How much should insider buying or selling affect a decision on buying, selling stocks? Usually not much at all, because it's most S&P, NASDAQ stocks, they're highly liquid. So, or like Microsoft, for example, to have the CEO sell half of his shares, 285 million, barely budges the stock. So not a big deal. Used to be a big deal with the lower not penny stocks, but lower priced, less liquid stocks. Mm-hmm. Yep. I love it. Cody wins the office fair and square, and he still forces. Yeah, I'm always watching. That's what that means. That means I'm always watching. There's old Dustin with the sword right over Cody's head. He likes it there. Yeah, that's pretty much it. Mm-hmm. Well, I will wrap it up there. We will be back tomorrow to do this all over again, because why not? And I appreciate you guys watching. I know you have other choices when it comes to your financial education, and we're happy that you choose Jazz. Very nice. Huh? Can you tell I have airline family in my history there? All right, enjoy the rest of your day. We'll see you tomorrow, and yeah, thanks for watching.